I'm going to give you one strategy that helped turn me into a profitable day trader. And this is the strategy that I use every single day as long as the opportunity presents itself. But if it does, I am paying attention to this one strategy, and it is a failed auction to the IB high or the IB low on the day trading charts. Let's dive into this. I'm going to share my screen and I'm going to show you exactly what I'm talking about here. These are TPO charts. If you don't know what TPO charts are, I'm not really going to go into a whole lot of that. Go watch my last video on what TPOs are. But essentially, this shows me where value area is, point of control, and initial balance. And now, like I said, the strategy that I'm using pays attention to the initial balance. And so that's what this yellow line is. Look at this yellow bar. This is the initial balance high and initial balance low. And what I'm looking for is a 30-minute close either below or above the initial balance. For example, if we go up and test the high of the initial balance and we actually break above it, say like right here in C period, where we broke above the initial balance, I want to see a 30-minute close back into the initial balance range. Because then that tells me that, okay, we tried to break above the initial balance and then got brought back in and closed inside or below the initial balance high, telling me that there's a high probability trade that we could rotate down to either the lower end of the initial balance range or just have a complete rotational day to where we have a trend to the downside. And so that's what I'm looking for. And then vice versa on the initial balance low. If I see initial balance low is set and that we come down and test or break below the initial balance low, but then on the 30-minute close, we are back inside the initial balance. Again, that's telling me that I might want to take a position long and catch the move back up to either the initial balance high or the new trend that we're catching on the day. And so that's what I'm looking for. Now, does this always present itself? No, it doesn't. It doesn't always present itself. It doesn't have to. But a good example would be, well, I say a good example. I'm gonna flip over to my regular charts here that I look at to trade on. Now, in this particular example, it took a lot longer for us to get back into the initial balance, but I'm gonna break it down for you. And for those that don't know what the initial balance is, it's the first hour of the trading day. So the market opens at 8:30 a.m. Central Time or 9:30 Eastern Time, and it's the first hour of the day. And so for me, the initial balance is set at 9:30 a.m. because that would complete the first hour of the day. And so what I'm doing here is I'm going to 9:30, right? So I can see that, okay, so the initial balance was set pretty much right at open. The initial balance high was set right at open at 8:30 because then we just kind of chopped around, came back down to VWAP, and the hour was over on this candle here. So the initial balance high is here. Initial balance low would be here. So we have initial balance high, initial balance low. And you can see that we basically ripped, right? We ripped above the initial balance high, and then we consolidated up here, consolidated. And it wasn't until really this afternoon, like it was kind of just a barcode, basically mid-morning / early afternoon. And it wasn't until later this afternoon around, what was this, about 12:50 leading into 1 o'clock, that we started getting some selling pressure and that we fell below the initial balance high with serious aggression and just continued the downward trend, right? And we fell, this is the initial balance high right here at 236, and we fell all the way down to 167. So you can see that buyers were not able to keep us moving upwards into an upward trend. We barcoded until we initially just fell right back down into the initial balance to catch some selling pressure. And so it would have been a great short. Is it great trade location entry? No. But if you notice that we break into the initial balance high here, you could have taken a short. Not great trade location because you'd have to risk basically all the way back up. However, you can see that it would have been a good trade. Now, what you could have done is, and this is actually what I was looking at this afternoon, is we see that, we double topped here. Before this even happened, right? We double topped, okay? And we tried to go up and run it, and we couldn't run it, and we just sold right off, right? Identifying that weakness, you could have got a good trade location, and then what you could have done was add on to your position as we broke the initial balance high and just catch the aggressive falling knife pretty much. Now, hindsight's 2020. I know that. I get that. But this is what I look at in real time, right? I like to trade off the initial balances because not only does it give me a range, and if we're having like a normal day or a normal variation day, again, if you don't know what that means, look it up on Google or read the book Market Profile. But if we're having a normal variation day to where we break into, or say below the initial balance range and just chop around and come back up into the value area, right? Then it would be a good trade location to take a long at the bottom of the range, ride it back up, take a short at the top of the range, ride it down, right? If that's what the day is identifying as, if we can clearly see that it's a normal day or a normal variation day, then we can pretty much predict that price is going to stay within value area or the initial balance as well. So that's one thing that I look for. That is one strategy that has helped me so much in my trading journey, helped me become a profitable day trader, because it's giving me parameters, it's giving me guidelines and rules for me to follow and to pay attention to that help me identify and take high probability setups. I highly recommend you use this. I highly recommend you give it a shot, give it a test, right? If you don't know what initial balance high or low is, again, it's the first hour of the day, but you can do more research on that through on YouTube, Google, whatever it may be. And pay attention to it on the charts, right? Go back test it, get into like a simulation account and just back test trading the initial balance highs and lows. If we get that failed auction, which again is a 30-minute close, say if we break above the initial balance and the 30-minute candle closes back within, then the initial balance, then we have a failed auction to the upside, and we can predict that price is going to come down and we can take a short. Then again, vice versa. If we break below the initial balance low and the 30-minute close comes back up into the initial balance, then we can predict that it might be a good opportunity to take a long, and it presents a good setup and a high probability trade. So again, just something that I think you should pay attention to and back test on your own and see if it works for you. It may not work for you. What works for me may not work for you, and what works for you may not work for me. But it is something that I think presents a high quality and a high probability setup. So I definitely recommend you giving it a shot. If you guys like this kind of content, be sure to smash the like button down below, subscribe to the YouTube channel to get more content, and I will see you in the next video. Cheers.